welcome back to Brashonomics. I'm Ben Brashin. It's Monday. We're talking mortgages with Ryan Leopold of Cobalt Mortgage with almost $1 billion in loans funded. He certainly has been in the industry long enough to fund a lot of loans. Ryan, how you doing, buddy?
I'm doing awesome, man. How you doing?
Good.
Good.
You know, when
Been
you
in the
start...
business too long, I'll tell you that. Way too long.
Well, I think one of the things that's interesting about being in the business for as long as you have, or I have almost, is you've seen so many different loan programs come and go. Mm-hmm. And now you really don't have a big bucket or a lot of buckets to choose from. And so when people are thinking, well, I'm going to go get pre-approved or I'm going to find a creative lender, I think that sometimes they don't realize that pretty much every lender, any bank you go to, any mortgage broker you go to, is really underwriting for the exact same guidelines. Mm-hmm. And I'm not sure that people fully understand how that works or why it works that way.
It's very rare that a buyer is going to understand the difference. And really, quite frankly, it's not their job to understand the difference. It's our job to understand the difference and really do our research to offer the community a product that they need based on their unique circumstances. But like you said, it is the banks and mortgage brokers are kind of all the same in the fact they're all offering Fannie Mae and Freddie Mac based products. And we've talked about it before, this kind of box theory that 90 to 95% of all the mortgages that are originated are kind of in that Fannie Mae, Freddie Mac, FHA, VA box. So anything that would be outside of that would be considered a jumbo loan or basically a portfolio-based loan, or that's where the uniqueness of a bank or uniqueness of a broker in the products they offer will kind of come to the light. And a lot of those programs that are offered are for unique situations and or high loan amount situations.
Yeah, and I'm trying to think of like another real-world example where this happens, and it's almost as if you're going to a gas station, right? Almost all the gas is coming from oil. Oil is coming out of the ground, right? But you can go to one of dozens of different gas stations, different branches, I suppose you could call them, of a gas station. There's a Shell or a 76. But really, they're all selling gas, and you kind of have these three choices at every gas station. You can get your 92, your 89, or your 87 octane. But really, it's kind of the same stuff, just being sold by different companies and different people.
Pretty much. It just kind of comes down to which gas station.
We are like gas stations, Ryan.
Which gas station or lender best suits your needs for convenience, professionalism, cleanliness, as a gas station would be, I guess.
Sure.
And what other perks and benefits do you have for going for the gas station A or gas station B if the product is exactly the same?
Yeah. And so that's it's an interesting way to think about it, but your car is going to run on the gas no matter what. Just like a mortgage is going to pay for your house no matter what.
Yeah, and I suppose the difference may be if you go to gas station A, they just, you got three kinds of gas and you pick which one you want and you pump your gas. If you go to gas station B, you have the three different kinds of gas, but maybe you have a consultant there saying, you know what, you have this kind of car, maybe this kind of gas is best for your car. And while we're here, let's look at your oil, make sure it's good, let's wash your windows, maybe get a car wash, stuff like that. I think that's what's going to decipher.
I don't think that gas station exists anymore, does it?
In theory. I mean, it would be nice.
It would.
But that's how I look at it, is there's going to be different gas stations and different levels of a service and experience that are going to best suit your needs. And that's the same thing when you think about, okay, everything is a Fannie Freddie world. When you get outside of that, how do you find solutions to tough scenarios, which you still have buyers who want to buy homes and get mortgages, but their situations are unique and different, that not every lender can still help those people. Sometimes there has to be some specialists.
Well, and I think you make a good point. It's kind of like it's what you're looking for. Again, if we go back to this gas station piece, but a lot of people will go to the most convenient gas station because it's there, and they're not necessarily looking at the 6 cent difference per gallon, right? Mm-hmm. I know I don't look at the price of gas. I just pull into the gas station when my light goes on, and that's the end of it. Mm-hmm. Some people want convenience. Yeah. Some people have that app that it probably tells you where the cheapest gas is within 15 miles, and they're willing to drive 15 miles to save that money on gas and go through that headache.
Spend $4 to save $4.
Spend $4 to save $4. But I think it's kind of the same thing with going out and getting a mortgage. I mean, you could go through a lot more hoops, a lot less convenience by going to maybe an out-of-state lender who has slightly lower interest rates, and it's not as convenient. It's going to be more difficult. Or you can pull into the one that has more convenience, it's closer, and you might end up paying a little bit more for that ease of use.
Yeah. It is, and I think it's personal
preference. And I'll get off the gas
preference,
station piece at this point in time.
I think we're past that.
Okay.
I think we're past that. Yeah, like we said, there's not a right or wrong place for anybody. It's really just kind of for the consumer is getting out there and finding the best personality, the best professional to help them with their objectives. But first thing is the consumer has to understand what their objectives are so the lender can now do their job to help them solve that problem. And that's kind of, again, where we get into there are different lenders out there to serve different people's needs that maybe that buyer just doesn't fit in the traditional Fannie Mae, Freddie Mac, traditional loan program box. And that's, again, what I think a good lender's job is to know what options are out there and how to lead them in the right direction.
So how would somebody know they're being led in the right direction?
Well, I think it's understanding that there's situations that are tough. And so you just had Jared on, and a good example would be Jared had a client that's looking to do a couple things, refinance a couple investment properties, but the clients are not U.S. citizens. They live in Canada, so no U.S. employment, no U.S. credit. That is really, really difficult to get a mortgage in the States. And so that's when a portfolio lender will come into play, that a portfolio lender really looks at things from the standpoint of logic, not just guidelines, okay? Freddie Mac, Fannie Mae stuff is all based on guidelines. If you meet these boxes, it works. If you're outside those boxes, it doesn't work. So that's when, us having relationships with different lenders, we can either A, broker deals to them, and that's what a broker relationship means, is we understand their programs and we give them business. Or on the other side, in that situation, it's just about saying, hey, Jared, this is probably the best lender for you to talk to for your clients because of these reasons. And there's other situations. There's a lot of, Chinese and Asian buyers coming in who want to do financing as well. And that's a whole different pool of lenders to help them. If you have tons of investment properties, that's something that may be outside of a traditional box.
What's interesting nowadays that is different than before, and again, we kicked this off by talking about the longevity of a lot of loan officers in this business, including yourself. But what is interesting is that 5 years ago, 7 years ago, you could go to a broker who might have worked with all of these different banks and been able to procure money from many different sources. Most lenders are no longer in the business of having a relationship with, I would call them obscure banks that they wouldn't do a lot of business with, for the reason that they're not going to have that relationship for that one deal a year or whatnot. It's changed a little bit. It's
changed a lot. It's changed a lot. Is that those broker relationships are pretty far, gone. It's very minimal to have any real relationships. From the standpoint of brokering, that I can send a client to bank A
and be their point of contact,
and maintain that relationship. It's more based on, hey, I can't do that, but I do have relationships in the industry that can help in your situation. So I think a good lender, any good professional, are going to go out and try to align themselves with other professionals that can service the needs of their clients, because not every professional can help every client. I think that's a big part of what makes someone a standout top professional in any industry, is having those other relationships.
Well, and Ryan, to your point, if you want to know if you're being led in the right direction, I think if you find somebody who says, look, I'm not the right person for you, here's somebody you should go talk to, there's a really good chance you're being led in the right direction, because people are taking their livelihood and their income off the table to best serve a client, which Absolutely. Is something that not a lot of people do.
Yeah, very true. I think it's an awesome point, and that should be something we all strive to look for.
Absolutely. Ryan, thanks so much for joining us. We do have to go to break. We'll be right back.